It's a very good question. We've been very bullish on precious metals for a while, so obviously that's great. But even we are a little bit puzzled as to the strength of gold. What is interesting about gold, and I think very encouraging for the medium term, is that the momentum in gold has completely broken away from its traditional correlation to real interest rates and to the US dollar. The US dollar is basically flat to slightly up. As you've mentioned, yields have been rising. That should be bad for gold, and yet gold rises in spite of these theoretical headwinds. And that tells me that people are looking much further ahead to debt sustainability and these very heavy debt loads that we have, not just in the US, but indeed, of course, pretty much all over the world post-COVID and all the spending to do with these tax cuts. And so gold is getting a bit of a lift from that. And let's not forget, central banks around the world, and notably, of course, China, India, emerging market central banks have been accumulating gold quite steadily. I think the Chinese central bank has been buying gold for 17 straight months in a row now. And they're not necessarily very price sensitive. So I think that's interesting. But I think what may be even more exciting right now is the reaction we're seeing in other precious metals, notably silver, which is finally starting to catch up, but it's still far, far away from its $50 an ounce all-time high, reached all the way back in 2011.
I want to stick with gold right now. How should we interpret this rally when it comes to gold? And also, I know you're forecasting a possible correction when it comes to equities, but are you forecasting the same when it comes to gold? Your price target for gold is actually below the level that gold's trading at right now.
Yeah, it's difficult because, again, with such a strong momentum market, you never know where it goes in the short term. I think the rule with momentum is it can always go for longer than you think. So I wouldn't necessarily be taking all my profits in gold right now. But you might be thinking of rotating, for instance, into some of the weaker or cheaper relative plays like gold miners, for instance, which have not at all kept up with gold, interestingly enough, but whose profitability is, of course, expanding very quickly as the gold price goes up. If you say for gold miners, the all-in sustaining price of gold production is probably somewhere between $1,300 and $1,400 an ounce on average. Well, we're over 2,300 on the gold price. So that means they're making $900 to $1,000 per ounce of gross profit. These are gross profit margins we have just never seen in the gold mining industry before today. And yet the prices clearly remain relatively depressed and tell us that the market or investors do not believe that this margin can be sustained. But if it can be, then they look incredibly cheap.